Hello everyone, welcome to this webinar being presented to you by Towers Business Development. My name is Peter Towers and I'm the Managing Director of the company. Today we're going to talk about early stage innovation companies. Great for the companies, and investors love the incentives that they can obtain from investing in these types of companies. I would like to welcome those of you who are watching this webinar as a live feed from Facebook, and the other people who have joined us for this webinar today. If you have any questions and you're watching this as a direct live feed webinar, can you please type your question into chat and I will answer it during the webinar. If you're watching as part of the Facebook live feed, or you're watching this at a later time more convenient to you, can you please send me an email, peter@towersbusiness.com.au, and I will get a reply back to you. Early stage innovation companies. Well, let's go back to the beginning. Funding innovation can be difficult. In fact, it's extremely difficult for most people. The Australian government realised this when the government introduced its innovation statement back in December 2015. And part of that was the concept of an early stage innovation company, which come about through amendments to the Taxation Act. And the reasons for that will be obvious later on in our conversation today. So the legislation's been in place for about 4 years, but unfortunately, a lot of people don't seem to know much about it. It's there. Some people know about it, many don't. Some investors know about it because they've realised that it's got some real benefits, and we're going to be talking to you today about this. So the government's intention was to help young companies. Now, there's a misconception in some quarters that the participants, the directors, the leaders in the company have to be young. That's not right. It's a young company, as distinct from young people running it. Can be young people running it, of course, but in some cases, they might have some older people there helping them. So let's look at what a qualifying company is. The prime target is companies under 3 years of age. That's the young component. But in some cases, they can be up to 6 years of age, but the key criteria there is expenditure has to be under $1 million for the total of the last 3 years. So their total expenditure under $1 million for the last 3 years. But the main emphasis is on companies under 3 years of age, although this next item, income under 200,000 in the last 12 months, applies to a company that is aged up to 6 years, and obviously applies to a company under 3 years of age. But the $200,000 income limit does not include any grant money that's been received from the Australian government through Oz Industry under the Accelerating Commercialisation Grant. And we ran a webinar about that particular grant and its benefit for innovators last week. And if you'd like to obtain a link to that recording, just send me an email and we'll send that to you. So the income is under $200,000, but it doesn't include any grant income from the Accelerating Commercialisation Grant. And expenditure has to be under $1 million in the last 12 months. It can only be $20,000, doesn't matter, it's under $1 million. So it's targeting this key group that the government called young companies. So we go through those first lot of tests and you decide, yes, your company is meets those requirements. It's a young company under 3 years of age, income under $200,000, expenditure under $1 million in both of those in the last 12 months. Where do you go from there? Well, you've then got to pass one of two tests. So let's go and have a look at the tests. Now, the first test is called the gateway test. Gateway to get involved in this program. And you must earn a total of 100 points from a series of questions. So let's go through them. First of all, the legislation looks at research and development expenditure, because the assumption is that most people who want to qualify for this status will have undertaken research and development, although that is not mandatory. It's pretty obvious that it's going to be highly desirable if you're going to qualify and earn the 100 points. So if the company has spent more than 50% of its expenditure in the last 12 months on acceptable research and development or legitimate research and development, so that's research and development that the company has claimed the research and development rebate for by lodging its tax return, by registering the research and development activities with Oz Industry. So if the expenditure for the year was $700,000 and $351,000 was spent on legitimate research and development, the company earned 75 points. The same rules apply if the company's expenditure was only $50,000 and $26,000 was spent on research and development. They still earned 75 points. Alternatively, if the company's research and development expenditure was somewhere between 15 and 49.99% of the company's total expenditure, they earn 50 points. We've only got to build up to 100 points. So you may have got 75 or 50 points from research and development. If the company has been admitted at any time in its life, which is normally 3 years, into the Accelerating Commercialization Grant Program, they earn 75 points. Just a reminder, the Accelerating Commercialization Grant Program makes available grants of up to $1 million on a joint funding basis, 50-50, to eligible companies. So if the company has been admitted to there, 75 points. So if it's also been undertaking legitimate research and development, even the 15 to 49% category, they will have qualified as under the gateway test because they've earned more than 100 points. But let's move on and look at where else you can earn points. If they've completed or are currently undertaking, and obviously certificates have got to be produced to prove this, an accelerator program, they earn 50 points. And if you need details of what some of these other programs are about, you can send me an email, please. If they've attracted at least 50,000 shareholding, and it can be from one or a number of shareholders, doesn't matter, as long as they're at arm's length. They're not your father or your brother or your wife that's investing in the company will have earned 50 points. And really what that's saying is that you've gone to the market a little bit under Section 708 of the Corporations Act, and you've got some people to invest without advertising it, because you can't advertise to raise capital under Section 708 of the Corporations Act. If the company owns or is the licensee of a standard patent registered in Australia, they earn 50 points. Or if they're the owner or licensee of a plant breeder's right that was granted in the last 5 years, but you can only have one of those. So you only earn one lot of 50 points. You can't double up if you happen to have both of those items. It's one of. And if the company is the owner or licensee of an innovation patent, which is a concept unique to Australia, you would earn 25 points, or you could have also obtained that if you own a registered design, but that was granted in the last 5 years. But once again, you can only earn one installment of 25 points. So it's one or the other. You've either got a registered design or a innovation patent to get you your 25 points. And we'll move on. If you have a written agreement with an institution that is mentioned, listed in the Higher Education Funding Act or the Industry Research and Development Act, you can earn 25 points. So that might be an agreement with a university or some sort of other government agencies normally. But you only get it once. So you get a 25 point. It'd be very unusual that someone has got both of these at any one time. So it's not as tough as what it might initially appear. If you've achieved the 100 points, the documentation needs to be included in the due diligence file. When we consult to clients, companies on this process, we produce a very thorough due diligence file, which has got all of the supporting evidence included, because you need that for a couple of purposes that I'm about to refer to. The gateway test is a self-assessment test. The company is now able to start communication with potential investors. And when you sit down with potential investors that might be able to invest $1 or $2 million cumulatively into a company, you need to have all of your information readily available for them. You can't waste time. You can't say, oh, I forgot to bring that. Or yeah, we should have included that in the due diligence, but we didn't think anyone would want it or whatever. You need to have a very thorough, comprehensive due diligence file, which is what people like I prepare for companies, so that you've covered every potential question that the investor may ask you. So at that basis, you can now go off and start talking to potential investors. The tax office does not want you to submit an application to them for an approval. It slows down the process. They're saying that this is black and white law. Either you've got these things and you've got the documentary evidence to prove it, or you haven't. Now, telling an untruth won't work. What it will do is get you into very severe strife with any investors who've invested money, because I'm going to show you today that the investors really get something out of this, and they will not want to be disappointed if you're represented to them that they will receive some taxation benefits from making an investment in your company. If the 100 points has not been achieved, it's not all over, because the government recognised when this legislation was being brought into play that a lot of these companies are going to be brand new. You haven't been around long enough to apply for an accelerating commercialisation grant. You mightn't have done much on the research and development phase yet. Just done enough to be able to prove a story. So let's go into the principles test. You must supply written answers to the following questions. And the general idea is the written answers need some substance to them. It's not a yes/no answer. It's similar to the accelerating commercialisation grant application that's also administered by Oz Industry, and they're looking for at least an A4 page of information to each question. Some of these questions you may have to submit a consulting report to satisfy the requirements. So let's look at them. Is the company genuinely focused on developing for commercialisation one or more new or significantly improved products, processes, services, marketing, or organizational methods? You need to be able to answer yes, and then supply information as to why it's new, or what are the significant improvements that have been made to something that's already been developed. And how are you doing that? Who helped you? Who can give you some testimonials that you've done that, and that this is an outstanding product? You need to treat the tax office as being your first investor. In lots of ways they are, because by granting you this status, your company, the early stage innovation company status, they are opening the opportunity for you to be able to obtain interested investors who will talk to you, because there are some real carrots in this legislation for the investors. And the tax office is obviously aware of that. Let's go to the next There's 5 of these qualifying questions. Do these products, processes, services have a high growth potential? The legislation's got, and the notes produced by both Oz Industry and the Tax Office have some definition of what's included in the terminology high growth potential. But this is obviously not something that's just going to be able to be sold in a corner store somewhere in Australia. It's got to have high growth potential. And you've got to be able to quantify what that is in your answer. Can the company successfully scale the business? Scale's a bit of an in word at present, and it means that a company that is going to be able to grow. Now, normally we look at it and say a company might have a turnover currently of $1.5 to $2 million, and they've got aspirations to increase that turnover to say $5 million in the next 3 years. That's scaling up. And this is really the same thing. How are you going to be able to scale up your business? And the key word there is successfully. So you're going to need a leadership team. You're going to need a strategy. You're going to need to be able to say you are confident you're going to raise capital, and you're going to allocate a certain amount of that money to be able to fund the scaling up of the business. Can the company demonstrate that it has the potential to address a broader than local market, including global markets? So you may have invented this product and you may be based in Western Queensland. You have to look at a broader market, and a broader market is probably not the state of Queensland. It's looking at Australia. The government would like to see that you could identify a global market, but in some products or services that might not be possible. But you need to put your mind onto that task, your brain to that task, to determine how this company could grow and what's going to be necessary. How's it going to do that? Who's going to implement it? Have you got the team that can drive that? You need to be able to answer those questions. Now, when I'm saying you need to be able to, advisors can assist you in this process. Can the company demonstrate that it has the potential to be able to have a competitive advantage? So price-wise, service-wise, are we going to be able to look at your company and say, yes, you've got a very competitive position? There are other people who claim to be able to solve a similar problem to you, but you've come up with a different approach, different product, and you are 40% cheaper than what the alternatives are. That's a competitive advantage. But there could be other things, of course, that are built into the competitive advantage. Now, the answers to these questions have to be documented and submitted to the Australian Taxation Office. And at the same time, we need to be submitting the information that proves that the company is under 3 years of age and turnovers under 200,000 and income and expenditures under $1 million. A word of warning here, the company shouldn't claim it's an early stage innovation company if you're relying on the principles test until you've received a ruling from the Australian Taxation Office. The Taxation Office indicate they handle most of these ruling applications in about 6 weeks. So you submit the application with all of the documentation between the Tax Office, and they've got a special section handling this, and the Oz Industry. They come back and give a ruling. And then you have a document, which is a ruling from the Tax Office. It's normally got an end-line date on it, and it's normally to the end of the current financial year that they are approving. This company has been an early stage innovation company. So you can't get this certificate and then take 2 years to get your act together to be able to raise money. You need to be ready to go as soon as you get this certificate back from the Australian Taxation Office in your discussions with investors. But you just need to be careful that you are not representing to any investor that you have the status of an early stage innovation company if you are applying under the principles test until you've actually got that document from the ATO. So let's look at the documentation that's going to be required. You need a complete file which has got all the supporting evidence that answers every step of the way. So if you're applying under the principles test, you don't have to give any information that relates to the gateway test. You didn't pass it, that's all right. You don't have to say anything about that. But you need to submit the date of incorporation and details of your finances, copies of your tax returns, all that sort of information, so that the ATO can verify that you meet the requirements. And that information, so the ATO requires that. When does the ATO need this? Well, the gateway test, what I've got there, the information on the due diligence review is not submitted to them until the company's tax return is lodged, because it's self-assessment. And the ATO will check that out. If you're applying under the principles test, I've already indicated you have to submit all this information as part of the application. So let's look at it from the investors, because that's what this journey is all about. I think you must supply them the due diligence file, because they will want to make sure that you meet these requirements, because they're potentially going to be investing money in the company on the understanding that they're going to be getting some taxation benefits. So you need to have the due diligence file. The way we prepare that due diligence file, every document is signed by the directors. There's proof for everything that's been claimed under either the gateway test or the principles test. It doesn't matter. It's got to be supported. If you applied under the principles test, you've got a certificate from the Australian Taxation Office. That obviously should be top of the documentation, because that's giving them some real comfort that you have qualified. If you are applying under the gateway test, our system will have a complete summary of the items that you're claiming under. You don't have to list those 8 items. You only listed the 2 or 3 that you qualify under, show that you've earned the 100 points or more, and make that very clear in the documentation. And that's the process that I can take you through. The company will need a business plan, because we're now going to have we're trying to get money out of investors. We're going to tell them what your vision is. What are the strategies for this company, and how are you going to implement them? So they need to see the business plan. They need to see budgets and cash flow forecasts for the next 3 years at least. Some investors might ask for 5 years, but I've put there 3 years. And they should be projected balance sheets. So in preparing these documentation, the advisors should be utilizing predictive accounting, which is looking at budgets, cash flows, and balance sheets, 3-in-1 financial forecasts, predicting the future with as much supporting evidence as can be assembled to give some credibility to the figures that have been used. Market research, product overviews, testimonials, whatever can be assembled needs to have been brought into the picture. A summary of the directors and senior managers. Who are they? What's their history? What's their background? What's their qualifications? Because investors like to know this. An organizational chart, so they can get an appreciation that you have a proper company. So there's a board of directors, and who's on those board, of course? Who's the CEO? Who's the research manager or director? Who's the chief financial officer? And many of these companies will not have a full-time chief financial officer. So you may have come to an arrangement with an organization like ours or others from your accounting firm, to act as the Chief Financial Officer, so as to make sure that all of the information that's going to be required by the directors is made available to them. Most companies going through this process will require assistance, and our organisation, Towers Business Development, can assist businesses situated literally anywhere in Australia, because we've done it on a number of projects, so that companies can go through this process and get this classification, which will help you raise capital. So what's in this for investors? Let's have a look at it. The government offered carrots for investors to invest in these young companies. As far as I know, this is the first time the government has ever done something like this. I don't think it's been as successful as what they hoped, because not enough people know about it. It's one of the purposes for running this webinar today. So we're looking for arm's length investors. The benefits, as I've said earlier, do not apply for people who are associates, and they definitely don't apply to directors and people that are current shareholders. This is to attract new investors. So the first taxation benefit is 20% of the investment as a tax rebate. Now, if you are a sophisticated investor, or you're a company that's dealing with sophisticated investors, they can get up to $200,000 off their tax bill. And if they can't use it all this year, they can roll it forward next year and the year after until they've used up that credit on their tax, up to $200,000. So obviously at 20%, that's calculated on $1 million investment, but they can invest more if they like. They can invest $1.5 million, but they only receive the credit of $200,000 off their tax bill. Sophisticated investors are basically people who can manage their own financial affairs, who have net assets in excess of $2.5 million, or who have earned more than $250,000 income, gross taxable income, in each of the last 2 years. And they receive a certificate from their accountant who certifies that they are a sophisticated investor. And if so, they can invest as much as they like, and they'll get a tax rebate of up to $200,000. If they're a retail investor, which generally is anyone else, the retail investor can only invest a maximum of $50,000 into a company that's aspiring to be an early stage innovation company. Therefore, the maximum tax rebate for a retail investor is $10,000. And that comes off their tax bill. But there's more. If the investor holds the shares for longer than 12 months and less than 10 years, so longer than 12 months, but less than 10 years, there is no capital gains tax payable when the shares are sold. None at all. So if the original investment was $500,000 and the shares are sold so that the investor gets back $10 million, great investment, there's no capital gains tax, as long as this was a qualifying early stage innovation company. If the shares are still held at the end of 10 years, and clearly the government didn't really anticipate this, but they've got a clause in there. If they're held for longer than 10 years, the company is revalued at the end of that 10-year period. The shareholder could commission someone to value it. Obviously, the tax officer's got to agree with that valuation. And based on the percentage of the company that those original investors own or individually own, that would be their new cost price for capital gains tax purposes. So their $500,000 investment might have been shown as being now worth $4 million, and that's their new cost price. So if they then sell those shares for $10 million, they will pay capital gains tax on $6 million gain. So that's the way the early stage innovation companies work. There's more detail, of course, when you go through it. But if you would like to talk to me about that to get a better understanding as to how it might affect your company, or if you're a potential investor and you're looking around to find out more details, you can contact me and I'll give you those contact details in a moment. So that's the real message that I wanted to give to you today on the early stage innovation company. We've got some upcoming webinars. We're committed to presenting a webinar each week to try to outline to the business community in particular the services that can be offered to SME companies by experienced accountants, finance director people. We've got crowdsourced funding equity raising, which is the stablemate of early stage innovation companies, but it's got a different brief. And that's on Thursday, the 22nd of July at 2 p.m. AEST, 2 p.m. AEST. Using Section 708 of the Corporations Act to raise capital. And this is basically what early stage innovation companies is using. That webinar is on at Thursday, the 29th of July at 2 p.m. AEST. Corporate governance for SMEs, Thursday, 5th of August at 12 noon AEST. Identifying grants for businesses, 11th of August, 12 noon. Business review meetings, what do they mean? How do you organise them? Wednesday, the 18th of August at 12 noon. And planning funding for your business, Thursday, the 26th of August at 12 noon. You can register for these webinars by going to our website, www.towersbusiness.com.au, and then click on to webinars and you can register. Now, if you would like more information on the services that the team at Towers Business Development, led by me, can supply for your company, for your business, please contact me. Send me an email, peter@towersbusiness.com.au, or you can make a telephone call if you wish, 1-800-232-088, or you can find out more information about our company at www.towersbusiness.com.au. I'm just going to check again to see whether anyone has sent me a question. I can't see any, but if you think of some questions later on, or you're watching this webinar later on at your own time, please don't hesitate to send me an email, peter@towersbusiness.com.au. I trust that this has given you an overview of how early stage innovation companies operate and what the benefits are for investors in investing in these types of young companies, which will help the Australian economy recover from the challenges that we've had in the last 18 months. So thank you very much. Stay safe wherever you are around Australia and have a great day. Goodbye. And I look forward to hearing from any of you who wish to talk to me. Goodbye.